Welcome back to Stocklabs for another market recap. We are halfway through October already, and it was a pretty choppy week for markets. I was kind of looking for choppy to up-ish price action. Week started off pretty well. Markets were moving higher, and then by around Thursday Thursday afternoon, we were kind of running out of gas on the indices. And Thursday closed weak, and then Friday, market was trying to be up again in the morning, but then ended up kind of fading into the close again. So for the week overall, it was kind of a nothing type performance. S&P was up 40 basis points, Dow was up 80 basis points, the Qs were flat, and small caps were down 1.6%. So, a lot of underperformance in small caps. There hasn't really been any, meaningful trend over there for a long time. Kind of markets doing whatever the Qs want to do, basically, and the mega terra cap type tech stocks. Crude had a big week, and so did gold. This is probably gold's best week in months. There was some flaring up with the Middle East that's still ongoing with Israel, Gaza, other players starting to join the fray, Lebanon, Iran, even Egypt. It's a fluid situation. We're just going to have to sort of follow along, see how it shakes out. But crude markets were bid, precious metals were bid on, risk off type stuff. Even bonds were up 3.5% for the week, almost 3.33%. So, definitely risk off in the tape, especially back half of the week. But overall, things were modestly up, we'll say. I don't want to use any strong language to describe it. It was just a weakish up week. Now, for the leadership stocks that we watched, they were a little more mixed. Tesla down 3.5% or more. Nvidia flat, Google flat, Meta flat, Microsoft flat, Apple kind of up 75 basis points, and Amazon outperformed up 1.5%. So pretty good for them. If you took Tesla out of this, I think this group was up, but on the whole, they were down. So Tesla kind of dragging the group down here. As far as breadth goes for the overall market, weak-ish. Utilities were, kind of up. Utilities have had a terrible last several months. But, bonds caught a nice bid, so utilities, they didn't, the bleeding stopped for this week. Basic materials were also up. I mentioned that crude was up big, mentioned that gold was up big. So, material stocks were generally doing well, commodity type plays. Healthcare, perennial underperformer. So, it was the loser this week, down almost 4% on a median basis. Tech was next worst, down 2% on a median basis, even though the NASDAQ was flat. Tech stocks on the whole were not doing too well. Services down 1.3, industrials down 1.4, financials flat. Financial trade has really quieted down since the sort of March, April blow up. We had Silicon Valley Bank blow up. You had First Republic, I think, was the other one that blew up. Since then, it hasn't been a whole lot to talk about with financials. And consumer down 1.6%, so kind of not a lot to talk about there. And if we look at subsectors that were outperforming this week, you can see that it's the risk-off trade, especially dealing with the main themes that have been in the headlines. So Middle East tension, bids oil, obviously. Precious metals usually go along for the ride there if there's any type of like war or, conflicts or uncertainty with respect to what is going on geopolitically, all across the world. So, alongside the Middle East, you have China hasn't said a whole lot or gotten too involved, but they are a player that people are going to be looking to for, how they're positioning in the whole deal, along with, the Russia-Ukraine thing, even though it's kind of fallen into the background, since the Israeli conflict flared up, it's still ongoing. So, I mean, that thing has not really died down or anything since, what are we in now? Since 2022. So, yeah, it's still going on. So those are the only sectors that were doing well this week. And on the downside, there actually isn't a whole lot, but you have some, a lot of these are consistent losers. Airlines, always a loser. 3D printing, loser. Cannabis, loser. So, the standard losers are on here, and I wouldn't I wouldn't read too much into that as far as like from a market perspective. If we go to breadth by market cap, can go to the 1 to 5 billion market cap stocks. Down 1.4%, slightly better than the Russell. We've got 5 to 10 billion cap stocks are down 40 basis points. So again, better than the Russell. 10 to 50 billion up 7 basis points, flattish. 50 to 100 billion up 60 basis points. It's actually pretty good. It's slightly better than the S&P. And 100 billion cap plus stocks are up 73 basis points. So actually pretty good relative to the S&P and the NASDAQ. NASDAQ was flat. So overall, by industry, breadth was kind of flattish. By market cap, you could see there's a skew toward the larger stuff. 50 billion cap plus stocks did pretty well this week on the whole. I take that as a sign that money is being allocated to the market, even though the indices are kind of flopping around. You're seeing single stocks be bought, and the performance overall is decent. Russell is kind of whatever, but even on the low end of the cap spectrum, the individual stocks are doing better than the Russell index. IWM was down 1.5%, but 1 to 10 billion cap stocks were only down 75 basis points. So, I mean, they were down, but they weren't down egregiously or as much as that index was. So I would take this as an underlying strength in breadth for the past week. And if we look at the intelligence, what Stocklabs thinks for this week. Okay, there's quite a few names on this bullish side of the screen. We've got the S&P bullish, cloud computing bullish, another S&P bullish, semiconductors bullish, ARC bullish, China bullish, some IPO ETF that Renaissance has come up with that's bullish, another bullish S&P, and more China bullish, financials bullish, and long online, short brick and mortar also bullish. So there's quite a lot to pick from on here. I just want to see from the other side what Stocklabs is projecting as far as the downside, and actually there's not a whole lot on here. So short Qs are bearish, which is bullish Qs. Another short Qs is bearish, so bullish Qs. VIX is bearish once again, and Microsoft Bear ETF is bearish, so bullish Microsoft. I mean, I would take this overall as saying that the market is going to be up this week, and I don't think it's going to be that close, really. I mean, I think, basically I would expect an up move on Monday, maybe a little bit of consolidation, and then a further squeeze because we still have sort of all of this bearishness built up in the market over the last few weeks. As a matter of fact, market Stocklabs flagged the market oversold on Friday on the 13th as well. So you have kind of a confluence of, bullish factors kind of underpinning the market right now. There's inherent bearishness that is built up. Stocklabs itself is saying the market is oversold, and it's flagging an oversold signal, kind of at a higher level than where the market was back here. The market is, modestly up from these levels, and Stocklabs is coming in saying it's oversold again. So I take this as bullish. Again, from the breadth readings, stocks did okay this week, under the surface. So I'm taking this to be that money is flowing into the market. The market is flagging oversold, and you have this general sentiment of overall bearishness and kind of like dread in the market the last several weeks. So I think you're going to see an up move, and from there you could really see the move accelerate because a lot of shorts are going to be forced to cover. So I think this week's going to be bullish. It is option expiration week, so that can be whatever. But I'm not really too afraid of sustained downside action in the market this week. So that's all from me. And yeah, good luck out there, however you play it. And we'll be back next week to see how it all went. So talk to you later. Bye.